let's get started. First thing I have to do, of course, is the disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. Okay, and again, if you have questions, put them in the question box. I'll try to answer them. If there's something I can't answer, if you would put your name and phone number, or this needs to be changed, your Teams username. I used to use Skype. Skype's gone. We use Teams. You put that your username in the chat box, and Rory can get back to you over that and answer any questions that you might have. Okay. All right. This just is a graphic of what the alert service looks like. Basically, it's a SMS text alert. We call it Compass. That's what this software used to be called. The Spy Super System software used to be called Compass. It's been enhanced and improved, and now it's called the Spy Super System. But I kept the alert service as still called the Compass SMS text alert service. Send alerts out to you whenever I find a trade that's high probability trade. Send it out, and you'll get that. And usually, I'm on the alert service. I usually get them in 5 to 10 seconds from the time I send them out. Okay. If you listened to my webinars before, you have heard this, but I do want to, there's a lot of new people here, and I want to go over this. This is really important. Try to determine what actually moves the market. What moves the individual stocks or the particular ETFs, what moves the SPY, the Qs, what's moving it and creating a trend. So the market consists of many small retail traders, such as myself and likely everybody here. And we're these little bitty marbles here. And it's important to understand is when we're trading, and the institutions, which is this big marble, when they're not in there in any force, and what I mean is institutions are always in trading, but they're not necessarily trading in conjunction with each other as far as pushing something in the same direction. Some could be buying, some could be selling. But when you find them all pushing in the, most of them pushing in the same direction, that's when you have a move. When you don't have that, if you just got retail traders in there, what you're going to get is a lot of chop and chaos. It's very, very difficult to try it with just retail traders in there. There's no trend to follow. So basically, when we're looking for high probability trades, if we don't have the institutions in the trade, we're not going to trade it. We're not going to go in there and just fight with a bunch of other retail traders. We take our money from retail traders. That's who we take our money from. We're not taking money from institutions, but we do this by knowing when the institutions are in, and the rest of the retail traders, most of them don't know. And then we have software that tells us all of that and has the indicators that we need to identify that. Now, the institutions are made up of 4 different groups. The first group is what everybody probably knows about. These are the investment banks: Goldman Sachs, JP Morgan Chase, Morgan Stanley, HSBC, all the big investment banks. This is a big portion of the institutions with billions and billions of dollars to trade and invest. It's also made up of hedge funds. There's hundreds and hundreds of hedge funds. That also is part of the institutional group. The third one would be pension plans, pension funds, police pension funds, fire pension funds, state worker pension funds. More billions of dollars to trade and invest. And the last one is mutual funds. Mutual funds being T. Rowe Price, Vanguard, big mutual funds. They all have lots and lots of money to invest, billions of dollars to invest in trade. This is the group that drives the market. This is the group we want to identify when they're in trades and when they're not. It's very important to know that. Now, it's also important to understand that most of the trades that come through institutions are not coming through traders sitting at a desk and clicking on a mouse. These are mostly algo trades, trades that are created by programs that have been written to look for specific conditions in the market, or to look for specific news events. They track all that. So there's lots and lots of different algos that drive the market, and about 85% of the volume that goes through the market every day is made up of algos. Okay. So this is what we want to identify. So that's what moves the market, and it's our job to identify when the institutions are in there and when they're not. Okay. One little bit. This is going to seem a little off topic. This is a blackjack table right here. Ace and Jack spades, nice blackjack, couple $100 chips. Probably wondering why in the world this is part of this presentation. Well, if you ever talk to anybody about trading stocks or trading options, one of the things you're always usually going to hear is trading stocks and options is you're just gambling. All you're doing is gambling. It's fixed. You can't beat it. There's no way you're going to beat the big boys. So you know you're gambling. Well, the reason I bring this up is when I was much younger, much younger, I actually made my living playing blackjack in casinos in Las Vegas, and I was known what's called a card counter. I'm not counting specific cards, but I'm counting keeping track of what the composition of the remaining cards is to know whether the house has an advantage or whether the player has an advantage. But by keeping track of cards, this gave me a mathematical edge over the casinos by knowing when the cards were in my favor. So we're in my favor, I could make bigger bets, and when they were in the house's favor, I just bet the minimum, right? And it's really not you're not counting individual cards, but cards like deuce, 3, 4, 5, 6, 7 are considered low cards, and as they're removed from the deck, the player's advantage increases. And 10, Jack, Queen, King, Ace, as they're removed from the deck, the house advantage it goes up. So that's how you track these. You're just basically keeping track of the composition of the remaining cards to determine if you have an advantage or not. So trading stocks and options is very similar to that, in that without knowing what the institutions are doing, the trader has no edge. So in essence, they're gambling. So if you're trading without knowing about this, and most retail traders have no idea, they don't have any particular strategy or methodologies that they follow. They're basically just throwing darts. If you're doing that, you're just gambling. And the interesting thing is, both when I was playing blackjack and also as a trader, both require discipline and emotional control. Lack of discipline and lack of emotional control will destroy either one of these things, obviously. If you're trading and you get emotional about trades, it's very, very dangerous. Okay, so the SPY Super System, which is the software I'm going to show you, is my card counting system. This gives me an edge over the other traders, allowing us the ability to become consistently profitable traders. This is how we get an 85 to 90% win rate. So the SPY Super System software, in conjunction with identifying the best high probability trades, can lead to consistent profits. So that's why I put this in here, right? Just to, if you're talking to folks about that you want to become a trader or want to be a full-time trader, or I'm going to trade options, that's what you're going to hear all the time. You're just gambling, you can't win. Well, you can. All right, so we have a couple of rules to trade by in the room, in the alert service. First thing is we trade the best and skip the rest. It sounds very simple, but we're only trading stocks or options when the institutions are in the trade. And we skip the rest. And there's many reasons to skip trades. Obviously, if the institutions aren't in, that would definitely be a reason to skip it. If it's too far extended from a support level, that would be a reason to skip it. But we trade the best and skip the rest. And skipping the rest is just as important, if not more important, than trading the best. Because if you're able to skip trades that would have been losers, that's just putting in your money in your pocket, just like a winning trade is. So this is really important. And this leads to the next thing is, our objective is not to make trades. Our objective is to make money. This is directed at retail traders who overtrade. They feel like they have to be in a trade all the time. You don't. A lot of times not taking a trade is the best thing you can do. So our objective is not to make trades. Our objective is to make money. Now, it's important to follow this. Maintain discipline. And when I say maintain discipline, that means you have a specific strategy and methodology that you understand and use. Stick to it, right? Don't wander off from it. Don't be going to X and reading about stuff on X, or reading CNBC, or having your brother's uncle's cousin tell you that the stock is going to move up. Maintain discipline. Follow the strategies, and you have to learn and follow the process. I'll go exactly what the process is that we find these high probability trades. Okay, and lastly, remain patient. And this is really hard to do. Very hard to do. In the morning when the market opens, I get lots of people telling me that they want to trade this long, they want to trade this short because the stock's moving fast up or it's moving fast down. You've got to try to remain patient. Wait till you have some trend in the market to follow. I typically don't take any trades until I'll close trades, but I won't take any new open trades till after 10 o'clock. I have to see at least a half an hour of market action before I'm going to take any trades to try to determine if there's an existing trend. Okay, So as a profitable trader, we need an edge over the other retail traders. I've got 4 of them. My main edge is my SPY Super System software, whether the institutions are in the trade or not. This is a huge one. This is what 99.9% of retail traders don't have and they don't know, right? We also trade relative strength and relative weakness. Now, this is not to be confused with RSI, okay? Relative strength is what is my stock doing right now on a 5-minute chart versus what's the SPY doing. If the S&P 500 is moving sideways and or down, and my stock is moving up, stacking green candles, it's got relative strength. If it's vice versa, it's got relative weakness. And if you look at it in a daily chart, same thing. If I've got a stock on a daily chart that's moving up when the SPY is moving sideways or down, this relative strength. This gives you a much bigger additional edge on your trade because the stock is going to be much more forgiving if the market turns against you. So that's an important one. And again, this is one that I'm very surprised that more retail traders don't understand this and use this, but they don't. All right, and we trade with the market trend if there is one. Sometimes there is, sometimes there isn't. And then buy near support and sell near resistance. Very important to try to get in at near a support level if the stock's moving up, or near resistance level if the stock is going to move back to the downside. You want to be in close to a support or resistance level. So if you have to take the trade off because it goes against you, your losses are minimized. And this should be obvious, but there's a thing called FOMO, fear of missing out. Traders will get into a trade in the morning because it's shooting up green candle after green candle after green candle. So they chase it. They basically see it going up. They feel like they're losing money. You know, I'm losing all this money because this stock is rocketing up, and they finally crack and they buy it. And typically what happens is as soon as they buy it, the next candle or two, it turns down, heads back down again to the support level, and they're sitting there underwater wondering what happened. Whereas somebody who's waiting for support waits for stock that's strong like that to come back to a support level, bounce off of it, confirm that it's going back into the original trend, and then buy it, right? And the other person is sitting there taking losses, and we're getting in and taking wins. Big difference. Okay, now the compass system, or now it's called the SPY Super System. It identifies the highest probability trade setups while sidestepping setups that look good but will fail more often they succeed. This is by just looking at the SPY Super System. I use it on Thinkorswim, and I'll show you exactly how we determine that. It does this by identifying when institutions are driving the move and when they're not. And it analyzes complex trading data and displays the results in easily identifiable visual format. This is really important because if you're trying to trade by reading price action and looking at doing technical analysis, it takes a long time to become proficient at that. But with the SPY Super System, by looking at the colors, even a new trader is going to be able to identify when institutions are in the trade and when they're not. So it gives you a big edge. And for me, I think somebody who's using the SPY Super System, if you're a relatively new trader trying to develop some consistent profits, the fact that you can identify when institutions are in the trade and when they're not is going to accelerate your learning curve by a lot. It's going to really make I think your ability to get consistently profitable, it's going to cut the time way down. Okay, how we get an edge over retail traders, this is pretty much redundant here. We only take trades that are being driven by institutions. We trade stocks that have relative strength or relative weakness of the SPY or the Qs, and we trade in the direction of the overall market. And how does it give us an edge? Our trades are going to be supported by institutional buying or selling. This is extremely important. Stocks will outperforming the index, the SPY or the Qs, and they're going to be moving in the direction of the overall market if there is an overall market direction. All right, so those are our edges over other retail traders, and that's who we're trading against. We're not going to take money from institutions. We're going to take them from the retail traders. All right, now I'm going to talk about the SPY Super System software. I kind of want to emphasize this. I'm going to show you results that we've had over the last 4 years in the room. And again, 85 to 90% win rate is very hard to maintain. We maintain it just about every single month. And it's important to understand how we do that. The SPY Super System software is the critical element in finding and trading the highest probability trades. Knowing if the institutions are in the trade is critical. The SPY Super System software, it's the engine that drives our exceptional results. So when you see these results we go over today, I want you to remember it's the SPY Super System software that's driving these results for us, right? And the ability to identify when institutional players are driving a bullish or bearish move, and when they're absent. It's a key factor in pinpointing high probability trade setups. If you're in a trade and the institutions are not, it's never going to be a high probability trade setup. You might make money on it, you might lose money on it, but you're not trading a high probability trade setup. And again, this is the function of the SPY Super System software, and it's the critical component. All right, so as we talk about this, remember that. I did want to just throw this in here. I have Brightline has a YouTube feed every day. I'm on there from 11:30 to 12:30 every day for an hour. If you come onto the YouTube feed, you'll be basically be in my room. You'll see the charts I'm posting. You'll see all the conversation that goes on. You can ask questions. I have a lot of folks that come in on YouTube to watch every day for an hour. But it gets you a taste of what being in the room is like. Okay, and I'm going to run through this real quickly. And as a trader, I kind of want you to think about this for a second. As you go over these 11 most common mistakes retail traders make, I want you to think about yourself and whether any of these apply to you. I know they apply to all of me. I failed on all of these at some point in time. That's how I learned them. I'm not considering the current market directions. This is a very important thing. If you're trying to take trades and you get a choppy market, it's going to be much more difficult to make money on a day like that, right? So that's number one. Number two, over trading. Forcing trades, taking trades, feeling like you need to be in a trade all the time. I hear this all the time. You know, I'm sitting in front of my computer. They say I'm a retail trader. I'm a trader. I've got to be in something. And what happens is they stray away from finding the very best trades, and they start looking for trades they can try to justify as taking a trade, as opposed to just sitting on their hands, is what they should be doing. Trading your P&L instead of the technicals. The technicals are things like support resistance levels, candlestick setups, etc. Trading your P&L means you're watching how much money you're losing on a trade, and you're making a decision as to whether to get into a trade or get out of a trade based on that, right? You're not looking at the technicals. If you get into a trade that looks good, the technicals are set up, you really like the setup on it, but you get out because it went red on you, or perhaps you were green by $300, and then all of a sudden it fell back. You were red by $50, and it pops back up again and up here $100. You bail. As soon as it starts to move back down again, you get out because you're trading off of your P&L. You should only be entering trades off of the technical setup, and you should only be exiting trades off the technical setup. So please don't trade your P&L. I don't even look at mine during the day. I would recommend you not use your P&L during the day trading. Trading what you think instead of what the price says. I'm going to talk about this in just a second. I am going to spend a couple of seconds talking about this because it's so important. Being over leveraged, as I think everybody knows, you take too much risk. If you're used to putting $1,000 into a trade and then you put $4,000 into a trade, all of a sudden you're over leveraged. You're scared. You don't trade that the same way because you're nervous. In other words, you're instilling emotion into your trading when you do that. Not using a daily chart for swing trades. This should be obvious, but if you take a long trade and the daily chart is bearish, you shouldn't be in it because you can't stay in it. If it goes against you, you're out. So if you want to take a trade long, a swing trade, especially a swing trade, the daily chart needs to be bullish for a long and bearish for a short. Otherwise, you have no staying power. Lack of patience, we've talked about this already. Forcing trades, this is related to lack of patience. You want to get into a trade just because you're a trader. Attempting to pick tops and bottoms. Another big fallacy is that when a stock hits a new all-time high or a new annual high or a new annual low, the likelihood is it's going to continue higher when it's hitting a new high and lower when it hits a new low. So attempting to pick tops and bottoms before there's a confirmation that the top is in or the bottom is in, deadly for retail traders. Not waiting for confirmation to enter a trade. In other words, if you try to get in the stock when it's pulling back to support, and as soon as it hits the support, you get in. You don't wait for it to bounce off support and confirm that it's going to go back in the same direction. That's not waiting for confirmation. And fear of missing out, FOMO. Again, this is related to patience and greed. Most of these things are related to greed or fear. Almost all of these things are related to greed and fear. Okay, now it's trading what you think instead of what the price says. Now, I want to talk about this just briefly. This year, back in April or so, We had the tariffs on, the tariffs off. The market was churning all over the place, and there was a huge amount of bearish sentiment from all the gurus, everything you read, everything you saw. The market's going to correct. We're going to have a not necessarily a crash, but the market's going to correct. You should be bearish. People were taking all kinds of bearish positions because they thought the market should be going down. They thought it should be going down. All right, it was continuing up week after week after week from April on. It continued up, but people were trading bearishly because in their mind and what they've read and what they heard was that the market should be bearish. So they took positions in the bearish side, and they missed the whole move. 5 months worth of bullishness, they missed the whole thing because they were trading what they think instead of what the price says. And in regards to that, this is a Stephen Hawking quote, which I really like. The greatest enemy of knowledge is not ignorance. It's the illusion of knowledge. When you're trading, what you think the market should do, not what the market's going, what you think it should do, what it should be doing. You think this is what it should be doing. It should be going down. Or somebody on X told you that. Or you listen to it on CNBC. Or some guru that you follow told you that the market should be bearish. You should be going short. You're trading with the illusion of knowledge, right? That thought that you have that this market should be going down is not based on the actual market performance. It's based on your bias, based on what you read, saw, or heard. All right, so that's an important quote, and it's important to understand. To have a false bias in your mind is going to really hurt your trading. I never try to predict what the market's going to do a week from now, a month from now, a year from now, never, because people who tell you what they think the market's going to do, they don't know any more about what the market's going to do than you do. You know as much about what the next move in the market's going to be on a daily chart than they do. You can read indicators, etc. But if you're just saying that the market's bearish because jobs report's bad, or you read about all these layoffs, or you read about the tariffs were going to kill the market, you're making an assumption, right? I don't make any assumptions about what the market's going to do. I don't make predictions because of that, because I know my predictions will be wrong as much as they're right, just as like everybody else's. All right, so that's important to remember. Okay, don't trade what you read or what you think. Don't trade your bias. Think about what the market's doing. That's what you want to trade. Okay. Now, I'm going to talk about the SPY super system here, the indicators. I just want to, it's color coded. All right. So what you've got is green is bullish strong, blue is bullish trending, red is bearish strong, and yellow is bearish trending. These are the colors that we use. This tells us what the indicators that we've got are doing, and we have multiples. Okay. Now, I'm going to skip this one. I'm going to show you the new layout. This is the new layout we've got now. I had this one before, and it's basically the same, but I took a few things off. I took these little dots off, these trend dots. I took those off, and I don't use those anymore. And I took this 50-day moving average here, SMA. I took that off the 5-minute chart. Right. So this is what we use now. This is the actual SPY super system on Thinkorswim. Again, it runs on Thinkorswim. It also runs on Ninja, but this is the layout on Thinkorswim. And you know, if you buy the software, the right line will put it right on your machine. You don't even, you can download TOS. Thinkorswim is free. But here's the indicators, and this is the important stuff. All right, so this is what's called the modified Laguerre oscillator. This is an oscillator like other oscillators, but most oscillators take momentum and they take divergence into consideration. We've stripped divergence out of here. This does not have divergence in it. This is just plain momentum using the Laguerre, which I think is the most effective one. This actually shows the indicator. But up here is what we're really interested in. This is the current time frame momentum. This is a multi-time frame momentum, and this is the long-term trend. These three indicators tell us what the institution is doing based on these time frames. Now, if this is a 5-minute chart, this is based on 5 minutes. This is 5, 15, and 45, and this is a long-term trend. This isn't as important to these two right here. So if you're trading intraday trades, for example, you're just trading to maybe scalp the ES, or the futures, or the SPY, or the Qs, this is what you use. Current time frame momentum. If you're looking to do a swing trade, then you would switch to a daily chart, and the multi-time frame momentum and the current time frame momentum need to be aligned, either bullish or bearish. So you need to have green or blue for bullish, red or yellow for bearish. They would need to be aligned. If you're just trading intraday, this is what you're going to use right here. Okay, and then you have your long-term trend. Now up here in the pricing area, obviously you have candlesticks. This is the VWAP. This is the volume weighted average price. This is something everybody should have on their 5-minute chart because all the institutions use it. All the institutions use this VWAP, volume weighted average price, as a support and resistance level. The next two that I have on here are really, these are the ones I really like. This is the 15 EMA right here, 15 EMA of an EMA. This is the 15 exponential moving average. This is the 8. This is the 8 exponential moving average right here. I use these in conjunction with each other because typically when stocks come down and break through the 8, normally they'll support on the 15, and when they come up to the 15, a lot of times they'll stop at the 8. So I use these in conjunction, but both of these are also support and resistance levels. So these are the 3 levels that we use on intraday trades to enter our trades. This would become support and resistance. So this is where you would be entering for a long as it breaks above it, and a short if it breaks below it. All right. And these are pop signals. We have arrows that are pink and arrows that are blue. These tell you that a stock is breaking out of compression to the upside with red, pink, and to the downside with blue. So they become helpful as far as entering a trade is concerned. If you're getting a breakout of compression and you're breaking above the 8 and the 15, and you've got a bullish signal down here, it's a nice entry. All right, we'll show a bunch of examples of that. All right, so this is the actual Thinkorswim software with the SPY super system on it. All right, this is what it looks like. We also have this trend up here. This tells you what the market internals are at the current time on the 5-minute chart. It's trend up blue tells you you got a bullish trending up. If it was trend up green, you would have a very bullish trend. So this tells you what's going on, but not with the stock. This does not reflect the stock or the SPY. This reflects what the market trend is for the entire New York Stock Exchange right now. Right? It's basically looking at the total amount of volume of stocks going up minus the total amount of volume of stocks going down, and it indicates what the direction is based on that. It's very, very useful during the day. Okay, I'm going to show you a couple of quick trades here, how we use this, just so you can see. This is kind of an introduction until we get into this a little bit more. But if you're looking at the, this is NVIDIA. This is a trade we took back in 10/20/24. Of 10/24, yeah, 10/24. So yeah, last month. So this is a 5-minute chart. So we're looking to go long here because the stock's been trading above the VWAP. It was green for the day. We're trying to find a nice entry. Now you see what the current time frame momentum is doing right here. See, it's yellow, bearish, red, bearish, switches to blue. Right, the momentum now just switched to institutions coming in. So what do we look at? We look at a break above the VWAP right here. This is where you would take this trade. As it breaks above the VWAP, you see that, and it breaks above the 8 and the 15 all together with a pop out of the box symbol right there. We're breaking compression. The institutions are buying it. We take the trade right there, and the 15 would become our stop, and then the 8 would become our stop. So we just ride this up, and then as soon as it starts to lose momentum right here, see how it went to yellow? Right there, we're out of the trade. That's that trade, right? 1, 2, 3, 4, 5, 6 candles, 30 minutes, 30 minutes of trade, and probably made about $170 a contract on the SPY on that. Okay, hopefully that's clear. You can see you switch to bullish here, it moves up, it keeps on going. All right, and because the institutions came in, and we could see that they were coming in, and we also could see that it was happening right there where the support and resistance levels were being broken to the upside. Right, so that was NVIDIA. This was a SPY trade to the downside. Again, I wanted to show this. Here's SPY. Here it is breaking down below the VWAP and the 8 right here with a pop out of the box. See what's happening here? We go from bullish, institutions buying, to institutions selling right there. Right, the color changed. Then we broke through. This was a perfect entry for a SPY short right there on a 5-minute chart. It just drops down, 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 down. We stay in it as long as it stays below the 8. We stay in this thing. Once it starts to flatten out like that, we can take it off. And so you can selectively take your profits as we move along. Okay, so that was a nice trade. This was the SPY trade. I think this was 5.9. This was back a little ways, but again, you can see it here. All right, you can see the trade as it at about 10, it goes from selling to buying. It breaks above the VWAP right there. This was when I still had the, I didn't have the 8 on there, but same thing. It worked exactly the same way. Breaks above it. There's your trade right there. As it moves up, staying bullish. Okay, I hope that's feeling easy to see. And this was a Tesla trade right here to the upside, right in the morning. I usually wait until about 10 o'clock. This was above the VWAP. It was bullish. We take the trade here, and we get out here as soon as it starts to top out. Okay, see, it's bullish. Then it goes to bearish right there. NVIDIA, this is a swing trade. I'm just going to show you a couple of these. We're going to look at others, but this was a swing trade. That means this is a daily chart, right? So what are we looking for? We want the current time frame and the multi-time frame to both be bullish. We want them both to be green or blue, which it was right here. So what we did on this one was we waited for it to pull back. You see how it pulled back? And we talk about waiting for support. Comes back to support. We take it right here on the bounce, right? As it bounced off the 15, off support. That's called a PBO, a pullback opportunity. We grab the trade right there and we ride it up and we're out right here, right? Nice trade for us, 32% in 3 days. This was a trade at SMR. Again, you're looking at a swing trade here. This is a daily chart. Here's the multi-time frame momentum, current time frame momentum. See, it went from yellow to green, bullish here, was already bullish here. We take it right here. And again, we were in on the 13th, out on the 15th for about 56% profit. If you had $2,000 invested in the trade, it created about $1,170 profit. But that was where we took it. And we knew we'd see the institutions were coming in. So we grabbed that trade, right? And it was obviously very clear. Right, and this was a short in Wendy's. I won't do too many more of these, but we took Wendy's after earnings. This is where we took it as soon as it broke down, and we just ended during the day. We took a day trade. We took a swing trade on it, but we actually, I think we got out of it the same day because it came down so much. Another nice bearish trade. You can see the institutions selling here. See, they were buying here. They went to selling. The multi-time frame was already selling. Okay, all right. So this is kind of just a graphic that's a little humorous. This is what happens to retail traders. This is emotionally what happens to them when they don't have a methodology or a strategy. They don't know if the institutions are in the trade. Perhaps they took a trade with FOMO, jumped into it, and then it turned and headed back down against them, right? You've probably felt like this when you're trading. You get these big flushes when you're in a long trade or a big pop when you're in a short trade. Because you don't have a good methodology and strategies you can follow, or strategies that you're confident in, this is what you feel like. You're trading emotionally, it's gonna just destroy your account to be trading like that. And this is what most retail traders feel like. This is what you feel like if you're in a trade because you understand the methodology and the strategies, and you know it may not work out this time, but 85% of the time it's going to work. So you have confidence in your trading style. Okay. Just kind of to show the difference between basically somebody with no strategy and methodology, somebody with it. All right, so I'm going to talk about process, procedure, results. I'm just going to run through this quickly. The whole point of this is to tell you that it's important to understand that you have to learn a strategy and a methodology. You have to understand the SPY super system, what it's telling you. That needs to come before you start focusing on your P&L. The results that you're having are not going to tell you whether you're going to be a consistently profitable trader or not. P&L is not going to tell you that. The way this basically works is if you have discipline, and that discipline is going to lead to patience because you're not only trading what your discipline tells you to do, and that patience is going to lead to profits. You've got to learn the methodology and the setups and the strategies. The P&L or the profits will follow later, right? Please don't be using your P&L as an indication of whether you're a good trader or not, or whether this trade was a good trade. Many bad trades will make some money for you. Many good trades some good trades will lose. The P&L is not telling you that. Okay, this is the high probability trade setup funnel that I'm going to just run through quickly. This is when I talk about looking at a method. This is the method. Right, this is our highest probability trade setup funnel. First thing I do is I look at the daily chart if I'm going to be swinging it. It's got to be bullish if I'm going to go long, bearish if I'm going short. If it isn't, I don't even look at it any further. all right? Now, if it is, then I look to see what kind of a trend I've got in that stock. I'll look at the stock's trend on the 5-minute chart and the stock trend on a daily chart, just so I have a good feel for what the context is. Then I switch to the game changer here. I look at the SPY super system that has got to align. If I'm going along a trade, that's got to be, the SPY super system has got to be telling me that the institutions are in it. If I'm going short, they got to tell me that they're in it going short. If this is not me, I don't meet this criteria, this will blow the trade. I won't take any trades that they're not aligned. I'm just not going to do it, because I'm basically fighting against the institutions when I do that. Then I look for relative strength and relative weakness. Once I have some stocks that meet this criteria, I look to find the stocks that have the best relative strength or the best relative weakness, either on the daily chart or on the 5-minute chart. And then when I've found a few here, then I look to try to enter near support and sell near resistance. That's what I'm going to do. And if it's far away from it, I'm going to put an alert in to let me know when it gets there. That's the whole process right there. All right, so the strategies we use in the options room in the alert service, we have quite a few. Straight calls and puts, this is fairly common. We do a lot of straight calls and puts. I do straddles and strangles. This is, if you're not familiar with this is a non-directional trade where you take a call and a put. So you don't care which direction the stock goes, you just want it to move a lot. So we use straddles and strangles on stocks that have high volume and have big volatility. I use debit spreads using weekly options expiration. I do time spreads over earnings. We've done quite a few of these. These are very successful. These are non-directional trades. This is this gives us the ability to capture what's called volatility crush. Okay, when the market makers create the premiums for options, when they know the earnings are coming up that night or the next morning, they increase the premiums on the options, the calls and the puts. That's called volatility. Once the earnings come out, now they know where the stock's going to go and which direction. They take that volatility off and the premiums drop. This is what this strategy is meant to do, is capture that volatility crush. Weekly ATM strategy is one, you need very specific setup for this. We have one on right now in Schwab. This is where we actually sell puts every week. We sell puts every week, and we keep a longer dated put further out in time that's below the puts we're selling to protect the trade. It basically gives us the ability to protect ourselves if the stock goes against us. And we just keep selling premium week after week. We started this Schwab 2 weeks ago. The stock's just kind of been moving sideways. We're up about 59% on the trade so far, and we can still sell puts for another 2 or 3 weeks. Really, really effective, but the criteria is very critical. And I have videos on all of these methodologies. If you join the room on the alert service, you get to look at all these videos. Even if you buy the software, you get to see all the videos that go over all these strategies. We do credit spreads. And the last thing I'll talk about is quickly, this is SPY Super System methodology. This is trading SPYs, Qs, IWM, futures, anything off of a 5-minute chart. You can even use stocks if they're fairly volatile, like Tesla or APP and some of those really volatile stocks. Now, these are trades that you have to learn to take yourself. They're very quick. I point them out when I see them. I'll let you know what the strategies are. I have a video on it, but each individual trader is responsible for these trades. You have to determine your own entry and your own exit. I can tell you what I've done with it. It's been a very successful strategy for me, but I can't post them. So they're not going to be posted in the room as results because they're much too quick. If I tell you I'm getting into SPY, by the time I tell you that I'm getting into SPY, it might have already moved it, 20, 30%. Okay. And now just to kind of cover the alert service. This is designed for day trades and short-term swing trades. Just to know I don't have a service that's an investment service. It's designed for traders who can't watch the market all day. I send out alerts on real-time alerts on the highest probability trade settings. We're taking them in the room too when we send out alerts. We also take trades in the room that I don't send alerts on for multiple different reasons. But anything that you get an alert on, we've taken in the room, and I'm in the trade. I identify the highest probability trades by identifying when the institutions are in it, when the market internals are in our favor, and then we do some additional technical analysis to find the best ones. Okay, that's what the alert service is. Now, This is just my equity curve, and this is based on $2,000 per trade. It's just a baseline. I have to use some sort of a basis for trades, but this is what the room has done with $2,000 in each of the trades that we put in the room since January. Pretty nice, a little over 50 grand. All right, now, any questions before I start talking about Heiken-Ashi? Let me just get a little sip of water here. All right, so we're going to talk about trading Heiken-Ashi candles. All right, so here we go. This is what Heiken-Ashi candles look like. This says British pound, Japanese yen, doesn't matter. This could be gold, this could be Microsoft, this could be Tesla, this could be oil, this could be anything. The candle structure is exactly the same, right? So the way Heiken-Ashi candles is a couple of really important things to remember here. Bearish Heiken-Ashi candles have flat tops, okay? No wicks on them, no shadows. I call them wicks, but flat top, flat top, flat top, flat top. This is a bearish trend with Heiken-Ashi candles. You can see all the flat tops on these candles, and they're pretty good size. So it's important to understand, flat top Heiken-Ashi candles are bearish, flat bottom Heiken-Ashi candles are bullish, right? There's a difference between them. Now, another thing to understand is if I was going to say, let's say I like this trade long, and I'm kind of waiting for a pullback and waiting for it to get to support and bounce. So here it comes down, and you can see bearish trend coming down, coming down. Now we start getting wicks and tails here on the green candles, and then you see we get this Heiken-Ashi, what would be considered a Heiken-Ashi bullish reversal. You go from flat tops to a flat bottom. That's a Heiken-Ashi bullish reversal. But there's a caveat here. When you have big candles like this coming down, a small candle with a Heiken-Ashi reversal is not enough force to change this direction. Usually it's not in a place I would get in. Now it would work for you for a few candles because you got flat bottom, couple of wicks and tails, and then it starts dropping. But I wouldn't have taken it here. I would have been waiting for the next one where I get a flat bottom top, a flat top. This is a Heiken-Ashi reversal bearish right here because we just had a little bit of a bullish move. Now we get this big green candle, which is the Heiken-Ashi candle with a flat bottom. This is the Heiken-Ashi reversal that you want to be taking right here. This big flat bottom candle, but look how big the candle is. It overrides all these other candles. This is where you take the trade. That's a Heiken-Ashi reversal, and Heiken-Ashi reversals are really, really important because if you're waiting to get in and it's coming down here and it's bouncing off support, this is a golden opportunity to get long. Absolutely golden opportunity to get long. And if you're on the SPY super system at the same time and you see the institutions are now long on this thing, this is just they're handing it out to you in a silver platter. So you get flat bottom, flat bottom, flat bottom, flat bottom. Beautiful trend here. And you stay in this as long as you want. But I would have stayed into it until here. I would have get out right here. Again, we're getting wicks and tails, and I'm getting wicks and tails off the 5-minute candlestick. So you could have get out here or here. That's the trend. That's a Heiken-Ashi reversal candle. And that's how you find a reversal trend. You can, obviously there's bearish ones as well. But again, we'll cover what we just talked about here. Bullish Heiken-Ashi candles have flat bottoms. Bearish Heiken-Ashi candles have flat tops. Bullish Heiken-Ashi reversals are identified by flat top candles, which are bearish, followed by flat bottom candles, which are bullish. Now there can be dojis in between. You don't have to go one candle to the next. It can be a bunch. Right, and bearish Heiken-Ashi reversals are identified by flat bottom candles, followed by flat top Heiken-Ashi candles. That is the nuts and bolts of how you find Heiken-Ashi candles for reversals. All right, and you can switch the candle structure back and forth on your chart. So if you're looking to get into a trade, you can switch it to Heiken-Ashi candles, then switch back to regular candles if you want, or just stay in it until you're getting ready to get out and then switch back to regular candles so you can see the movement with Heiken-Ashi candles. Okay, so again, we're just going to reiterate what we just went through. Here's the setup we were looking at. All right, here's the flat top. These are bearish Heiken-Ashi candles. Now in this chart, I put in some lines. Let's say these are your support resistance lines. Let's say, for example, this blue line right here is a VWAP. Right, so here comes the stock coming down, and you're looking for a reversal. Here you get one here, flat bottom. But again, we told you this wasn't strong enough because these other candles were too big. So you watch it, And then you get a pop with a Heiken-Ashi candle right here as it breaks above the VWAP. That's where you would take the trade. It's now above your resistance level with a Heiken-Ashi reversal to the upside. You take it right there, and this you just follow because your support and resistance level is way down here now. So you want to ride this trade as long as you can. And you see how the Heiken-Ashi candles, how easily they identify this continued trend. Now you might want to get out right here, but you definitely want to get out right here because you can see the Heiken-Ashi reversal to the downside, the bearish Heiken-Ashi reversal, right? So that's how we use Heiken-Ashi candles. Okay, so again, we already just went over this. The advantages of Heiken-Ashi candles here, the big advantage is it smooths out price action, reducing noise. It makes identifying trends much easier. It improves identifying confirmation of trends or trend reversals. Again, this is a big one. Okay, confirmation of a trend reversal. You want confirmation. A Heiken-Ashi candle, by definition, is confirmation because it takes two candles to make a Heiken-Ashi candle. And again, it helps identify potential exits when the candle bodies shrink or the reversal occurs. There's the advantages of Heiken-Ashi candles. All right, now I'm going to show you a couple of, these are just graphics, and I'm going to show you some live Heiken-Ashi charts. Any questions on this from anybody? How many, does anybody here not use these in their trading? I use them all the time, and they're on a 5-minute chart. They're much more effective on a trending day than they are on a choppy day, but they're still very, very effective. Okay, so this is Uber. This is an old chart back in 2023. This is Uber. So you can see here on May 1st. Keep in mind this May 1st. These are regular candlesticks. Okay, gap up, regular candlesticks. This is what Uber looks like. Let's switch to Heiken-Ashi candles. Here's the same chart with Heiken-Ashi candles and Uber. You see the Heiken-Ashi bearish candles here? You see the bullish candle right there? It's a Heiken-Ashi reversal. This is where you would be taking the trade, beginning a strong Heiken-Ashi candle right here, bigger than these, moving to the upside. You would enter the trade here on May 1st. So this is where you would get in. You would just ride these Heiken-Ashi candles up. They start to turn color. Now this is my TC2000 chart. This is a charting program I use, and I'm able to color code the candles based on whether there's a compression break or not. But these are basically big green candles, and then they get smaller and smaller. And here's where you get out. You can see that they're getting flatter, and then you have a Heiken-Ashi reversal to the bear side. It went back up again, but I don't think you want to stay in this trade past here. Right? But notice May 1st is where you would get in it. It would be very difficult without Heiken-Ashi candles to grab this May 1st because you're getting these gaps. You just don't know that this is going to happen. There's no confirmation this has moved up, but on May 1st here, you have the confirmation. Okay. Now I'm going to look at some live charts as well here. I'm going to look on my TC2000 charts, and I'm going to look on this Thinkorswim on my platform. So I'm going to bring up my platform, and I'm going to go over a couple of things here. This is yesterday's trading right here on the five-minute chart on the SPY. And the reason I'm bringing this up right here is I want to talk just briefly about the indicators and how to use them. So this was a trade I took yesterday, right? So here's the SPY. The SPY had a pretty rough day yesterday in the morning. So you see right here at 10:30, you see the current time frame momentum. If I'm just trading this off the 5-minute chart, this is all I need. You see how it went from bullish? See here it went bearish right there at 10:30. That's where you take the trade. As it breaks down below the VWAP and the 8 exponential moving average right here with a pop out of box, you take the SPY short right here, which is where I did. I took the SPY short and rode this thing down. As long as it stayed below the 8, I stayed in. Starts to get a little bit choppy here, I get out of the trade. So it's about 5 or 6 candles, right? So you can see how that worked. Now, if I move this along to later in the day, you can see that there was some opportunities to get long as well for a short period of time. As it broke up here, see how it went from selling to buying? You could take it, but your trouble is, you see the VWAP, that was in the way. So I didn't take the trade because of the resistance, it was too close, right? So that's what that looks like. And again, there was a few opportunities for good longs yesterday. There was another good one right here at 2:30 as we went long. You could have taken it anywhere along here, but I took it actually as it broke above the 8 right there and wrote it up like that. All right. So that's how we use the SPY super system intraday trades. I've talked about that, but That's a live chart from yesterday, so you can see that. I'm going to cover a few. Heiken-Ashi reversals that we have on the daily chart. All right, so I want to show a couple of charts that had Heiken-Ashi reversals on a daily, right? So this is pen right here. Now let me switch to Heiken-Ashi candles so you can see that. All right, chart type right here. Let's go over to Heiken-Ashi. Okay, there's Heiken-Ashi candles. See the Heiken-Ashi reversal right there and right here. Right, that's a Heiken-Ashi reversal. But you see something here on the daily chart on the SPY super system. You notice that the multi-time frame momentum is yellow. Current time frame momentum is blue. These do not align. You cannot take that. You can't take that trade long. You can, but you shouldn't trade that trade long. Right. So let's see if we can find another one. I found CME. CME looks good. Right. Here's CME. Heiken-Ashi reversal candle. See the little tail and then a flat bottom. But look, bullish, bullish. CME becomes a good trade for Monday morning. All right. ExxonMobil. Some of the oil stocks are pretty strong yesterday. ExxonMobil. Heiken-Ashi reversal. See the Heiken-Ashi reversal right there? And right there it went blue. Perfect entry for it right there. If you go back a little further, you can see a Heiken-Ashi reversal right here as well. To go long, a couple of 2 days in it, and you'll get some nice profits. But that's ExxonMobil. And AEC, I think. Oh, no, AEP. AEP. Right, here's another Heiken-Ashi reversal, AEP. Little move up, pull down, right to the 8, and the 15, I mean, on the daily chart, and then a flat bottom candle. That's a Heiken-Ashi reversal. It's all green. So that's a good long. That's what I look for. As long as the institutions are in there, I'm good with that. On the short side, here's Whirlpool. Whirlpool, a nice Heiken-Ashi reversal. This is actually considered what's called a Heiken-Ashi continuation. We already had a Heiken-Ashi reversal. Then we flattened out, and now we got another flat top. So this is a continuation of the original downtrend, but it is a Heiken-Ashi reversal or a Heiken-Ashi continuation, and the institutions are selling this thing. WHR is a very good trade for Monday, for sure, short, especially if the market's down, and especially if the stock goes red. If I show it to you on my TC2000 chart, just so you can see that here. This is the daily chart on TC2000. This is the actual candlesticks. Regular candlesticks, not Heiken-Ashi candlesticks. I switched to Heiken-Ashi, that's what it looks like. What we just saw there on the Think and Swim platform. So that's a beautiful, obviously the stock's in a downtrend. And we can see here that the institutions are selling the heck out of it. Okay. And let's see. MANH, one more short. So I just kind of want to show you a few Heiken-Ashi candles. There's another one here. It's a good short, MANH, M-A-N-H. Manhattan Associates, and GEO is another one for short. And again, another beautiful short for GEO. Right. So these, again, this is how you use Heiken-Ashi candles to find good entries for swing trades or 5-minute trades. These are all swings that I'm showing you right here. Okay. All right. So I do also want to go a couple of things here. We had a couple of trades we took that worked. This was GLW. This was a trade we took on 10/24. So I go it's right in here. Is to see this. This is where we took the trade. It's interesting because you see we took the trade right here. See how it went blue on the daily? It was already green here. We took it here, and we get out right here. We get in and we get out the next day right there. We just took it. We just took it long because notice the daily went to yellow. So we took it overnight and then we were out. That was GLW. That was a nice trade, about 22%. Here's another one on Lumen. This was a daily chart as well. This we took on 11/3. Took it right here on 11/3, and out of it, you see how we got in and out the same day. See this big push up here? We had a sell order in for a particular price target. We took it right there. Notice the institutions buying the heck out of it. This is still a bullish trade, by the way. Still a bullish trade, as you can see. But we had such good profits that we took it off. Okay. And Google, let me show you Google. This was one we had the other day. This was a nice trade. 32% we took on Google. We get in on this on 11/5. 11/5, right here. This is where we took the trade. Get out right here. Boom, boom. in and out. This doesn't look like much. That's a pretty big move. It was about $5-6 on Google. We get in, we took 32%. I think we get in at 880 and out at 1180, or yeah, about $4 or $5 a contract we made profit on that Google trade. That's pretty nice. Okay, so that's the what the SPY super system looks like on the daily, what it looks like on the 5-minute. That's how you use it. We've looked at some Heiken-Ashi reversals. So hopefully that helps you understand how Heiken-Ashi reversals can help you become a better trader, finding reversals in the trade and confirming those. Okay, now I'm going to spend a little time here. I just kind of want to go over the results that we've had in the room and on the alert services. And I'm not going to go through all of them because I have a lot of them here, but I'm not going to go through all of them. But I want you to see a couple of things. In 2023, if you use $22,000 per trade, and again, this is an arbitrary number. Use 1,000, it's going to be half this. Use 4,000, it's going to be twice this. But investing 2,000, we made a little over 60,000, 60,208, 5,000 a month roughly. 2024, 55,000, about 4,500 a month. In 2025, this was through September, up to 47,765, up over 50 now, 5307. This has been our best monthly rate so far in the service. It's up more this year than we've had in the past. All right, so those are some of the results. Now, I probably should take this off pretty soon, but this was something I was pretty proud of. Back in April, when they put the tariffs on and then they took the tariffs off, the SPY went down 10% in 2 days. 10% in 2 days. These are the 4 trades that we had on. All right. The only trades we had on, we had 4 trades on the in the room and on the alert service. We were short Broadcom, EVGO, in for $75, out for $1.04, 39% profit. Nike entered for $285 a contract, closed for $9 a contract, 216% profit. We got lucky on this one because the tariffs really crushed Nike, because Nike builds all of their makes all of their product in Vietnam, and they were talking about a 39% tariff in Vietnam. It bounced right back up, but we took that one, and that was a big one. That was our best trade of the year. We also had Sarepta short, 78% profit, and NNE short for about a 25% profit. So that's what we did during that big downturn in the market in April. All right, so I'm going to cover some quick monthly results here, just so you can see what we get. Now, I want you to, the important thing is here is these percentages. You notice you're not seeing 100%, 200%, 500%. Most of our trades are going to be bringing in 15 to 40%. That's generally what you're going to get per trade. We try to be, the market doesn't allow you to stay in it too long. You've got to take profits when you can, but this is what we did in June. I was on vacation for 2 weeks, so this is not a very big account. We only had 11 trades, but we had a 10 wins and 1 loss for a 91% win rate, and produced about $37.90 in profits. Right, that was June. This July, we took a lot of trades in July. Again, please see that the percentages we get for wins are 20%, 32, 52. We take losses. Obviously, we take losses. Be aware that no matter what you trade, you're going to have some losses. We just don't have an awful lot. Again, Microsoft 10%. We did have that Sarepta for 166%, but you can see the percentages stay within the same range. That's what you can expect. I don't want people to be thinking that you're going to get 500% a trade. It's not consistently profitable to be able to do that. Okay, that was July. This was July results, 30 and 3. This was our best month. 30 wins, 3 losses, 91% win rate. Very difficult to do 90% win rate trading intraday and swing trades. But that produced about almost 17,000 in profits in July. Here's our August, 20 and 4, 84% win rate, produced 59.60. September, here's the September trades. Again, 21 wins, 4 losses, 84% win rate, produced 47.44. So that's where I've gone so far. I haven't done October yet. We just started November. November started off really, really strong. October was a very tough month. I think the room was pretty much even or down $200-300, but the alert service was up almost 3,000, so pretty good there. But so these are our September trades. Again, you can see the percentage gains here. Those percentages stay around the same. Okay. I'm just going to run through these quick. I'm not. This is way back to January 2024. So let's just see the percentages that we make in win rate: 90% win rate, 92% win rate, 88% win rate, 86% win rate, 85% win rate, 89% win rate. And here's my losing month. We're only losing month in almost 4 years now. September of last year, we had 8 wins, 5 losses, 62% win rate. An embarrassment for me. It's about the lowest I've ever had. But we only lost $1,786 in the room. You notice here, we made 4,500. We lost 1,786. The alert service was only down 295. And then it's October. We bounced right back with an 85% win rate and 74.48. Pretty nice recovery. Room was 6063. Okay. And November, again, more profits. I'm not going to run through all these. This is January through April of this year. We've already pretty much covered those. All right. So those are the percentage wins that we've had. And I'm not going to go through and keep going over them. I think you can see that we're very, very profitable. Again, very profitable, 85 to 90% win rate. This is what the alerts look like. When you get an alert on your phone, it's coming on SMS. It's going to have the initial alert's going to have the date. It's going to have the stock symbol, it's Nike, buy the April 11th 67 puts. All right, so that is your April 11th is your expiration date. $67 is your strike price, and this is what you should pay for. That's what you'll get. Now, once we determine what we want to sell it at, you'll get the same alert, except it'll have this tacked on. Sell order for $9. That'll tell you to put an order in to sell the stock for the option for $9. And then you'll get a confirmation that was sold on April 3rd for $9. All right, and there could be other ones. I mean, if I sell it, say 9, and then I have to change it to 850 or 950, you could get another one. So you get alerts that are going to update you on all of that. Okay, that's what the alert service looks like. Pretty easy to use. Again, how do we achieve these kind of results? We follow the process. We've talked about this. We're able to identify when institutions are driving a trade and when the market internals are heavily bullish and bearish. So we only take trades when both of these are in our favor. Not completely true. I'll take trades that institutions are in if the market internals are neutral. As long as they're not against me, I'll take it. Okay. This is what we use, triple screen assessment. We use momentum, trend, money flow. This is the key thing, momentum right here. Again, this is how the SPY super system finds this stuff. And it's in the software that does that. Okay. So again, here we are with the new layout. We've looked at this already. Modified the gear oscillator, current time frame momentum, multi-time frame momentum, and trend. And there's your VWAP, your 15 EMA, and your 8 exponential moving average with your market internals. This is all you need to intraday trade or swing trade. You have with the institutions and those indicators, that's it. You don't need things like MACD. You don't need things like RSI. You don't need things like Fibonacci. The only other thing I have in the 5-minute chart is one pivot point that will occur when there is one to be calculated. All right, so that's what it looks like. We also, if you get the software, you also get this template. You also get this template. This is for folks who just want to trade off the 5-minute chart. SPY super system trades on the SPY, the Qs, the futures. So because they're only interested in the current time frame momentum. We drop the trend, we drop the multi-time frame momentum. We just use current time frame momentum and the other indicators that we use. There's the 15, there's the VWAP to find these trades. This is what you get. And you get both of these. If you buy the software, you get this one, you get this one, you can flip them back and forth. Okay? Here's a SPY super system trade. I just wanted to highlight a Heiken-Ashi reversal on this, using the SPY super system methodology for a Q trade right here. You see how it's coming down along the 15 and see the Heiken-Ashi reversal. See the wicks and tails, flat top. That's a Heiken-Ashi reversal right there. You just follow this thing down. Notice that the institutions are selling. They went from buying to selling. You could get into it right here, or you can get into it right here. Anywhere along here is fine because it's selling. And then you just ride this thing down, and the chart doesn't go far enough, but you could have just ridden this for a good long time. That was a long trade. That was a lot of money made on that trade. Okay. And I did want to just talk about the SPY super system trades. Remember, what I'm talking about with this is trading the SPY, the Qs, the IWM, or the futures, or any individual stock, just using the 5-minute chart. This is all you're using current time frame momentum, and you're looking for breaks above and below the VWAP, the 15, and the 8 exponential moving average. right? Any of these. That's what you're using. That's what this software does. These are the trade results that I've had starting a year ago, July. Now, these are my trades. I have to reiterate. These are not results that I'm saying anybody else got, because I can't post these. I can let you know when they're set up. I can give you a video on it. You have a video to learn how to do this yourself. But I have a lot of traders that take a lot more trades than I do, because this is all they do all day long. But I want you to be aware of it. And again, there's a lot of trades. You can see last August, a year ago August, 56 wins, 6 losses, 2 scratches for $8,200. These are pretty nice profits, and none of these profits are included in the room totals that I showed you. These are all completely independent. But you can see how well these are. These are quick trades. Okay, you're gonna have one trade on at a time, and they're gonna be very short duration. You're not gonna be in these trades for very long. I got a lot of people in the room that do these 5, 6, 7 times a day, and they're just ecstatic with this thing. I think somebody told me yesterday he thought he had it with the SPY super system on trading off the SPY. He's been trading off the SPY with this the SPY super system methodology set up. That he had like 10 winning trades this last week, and said, you know, he feels like he can see into the future. Well, listen, they don't all work. They're going to go against you. You're going to see I've had losses in here, but they're pretty effective. All right, so this is November, December last year. I'm just not going to just show you the dollars. That's again, that was 2,000 in each trade, and these are my trades. I just wanted to emphasize how effective this strategy is if you like to trade like this and you learn it. All right, this is my super system trade here in October last year. This was the room. This was the SPY super system. If you were in the room, this is what you would have got. You would have got these exact. If you followed all the trades with 2,000, this is what you would have made, somewhere right around there. But these are my trades. This is what I was able to do. You would have done better or worse depending upon how good you are at trading the SPY super system trades. Right? There's November, there's December, the whole quarter, very, very strong. Okay, the SPY super system 24,651, in the room 17,774. These are not inclusive. This is separate from this. These are not together at all. Okay. All right. So this was again SPY super system trade. I think I've probably shown you enough of these. This is one I had an old one before, where I showed you where you get in here. Here it goes from red to blue, right? Current time frame momentum turns from bullish to bearish. I'm sorry, bearish to bullish. You take the trade here. This is one we took last year, again, for about $220 per contract. All right, so I just kind of run through these pretty quickly. I think you've probably seen enough of these to show you how effective the identifying institutions are with these indicators, using them in conjunction with the 8 to 15. This is what this looks like on the new chart. This is the one we just get the one indicator. Again, you can have this, or you have this, and you can flip them back and forth. All right. All right. This is a new template. Again, I'm not going to beat these to death. This was a nice trade in IWM. That's the Russell 2000. Notice we shorted it right here. Institution selling it. We shorted it right there as it breaks through the VWAP. Write it down. Get out right there. Okay. All right. And again, these are some trades we've taken recently. These were not SPY super system trades for the ETFs, the SPY, the Qs. These were trades on regular stocks. We took this aligned trade. We actually expected this to be an overnight trade, but we took 51% in an hour, so we get out. And you can see here, see how it's below the VWAP, and see the pop out of the box symbol right there, and see what it went to, selling to buying. So we took it right there, and we got out an hour later for 51% profit. Beautiful trade, really, really beautiful. URG, and this was a day trade we took, a daily trade, a swing trade, basically using a daily chart. Popped right here, we took it here. Institutions buying, we were waiting for compression to break. It did. We took it, we get out right there. 48% profit. NVIDIA, another nice one. I think I showed you this one earlier today. All right, and there's SMR. Again, I showed you that one. This was a Nike trade we took. We took it right here at 328. Notice how the institutions were selling the heck out of this thing. We were waiting for a breakdown, which we did. We took it here, stayed in it. We actually had a profit that day, but stayed in it. And there's the flush down on when the tariffs were put on. That's where we made 216% right there. All right, so Sarepta, same thing. took this here off on the breakdown as well. Notice that the institutions are selling. There was no question that the institutions were selling the stuff. All right, this was a long in HIMS. Nice move here. Again, took it right here. Probably should have taken it earlier, but took it right here. And again, this is the VWAP. The VWAP is not used on the daily chart. I ignore this on the daily chart. Okay, so that covers what I wanted to cover today. It's a little over an hour. I don't like to go too long. And again, I'm not a professional presenter. I'm also not a marketer. I'm just a trader, a full-time professional trader. I've been doing it for a long time. And I do the best I can to try to help everybody become better traders. And that's what I do in the room every day. I spend a lot of time in there trying to help educate folks to become better traders. We spend a lot of time on analyzing trades, analyzing where you should get in, where you should get out, what the technical analysis is. So again, here's the strategies that we use, all very, very effective. All very winning strategies. Every one of these strategies has at least an 85% win rate, or I wouldn't take it. I vet all these before I take any new strategies. I did that with time spreads. I did that with weekly ATMs. They all have to have an 85% win rate or more over between 100 and 200 trades with real money. I do it with real money. I don't do any back testing. I do all front testing. All right, so this is what they've got for offers for these. They're coming out with the Black Friday specials a little bit earlier. If you go to the chat box, by the way, there'll be a link there for what we're going to talk about right here. All right. First thing is that you can take a free 2-week trial, which gives you the alert service. It gives you my room, and you get this Wise Way to Trade options. This is my master classes. These are the training modules I have. I have about 31 of these training modules. Then it rolls over to $396 a quarter after the 2-week trial. You can obviously cancel anytime you want. Now the text alerts you can do a one-time payment on the text alerts, and you get my training modules. You also get into the Discord room. That's forever, one-time payment forever, $24.96. This is probably the best deal I've ever seen for this software. This you get one-time payment gets you forever, basically lifetime into the trading room, into my trading room. You also get the SPY super system. You get the SPY software forever with all the updates that come with it, the scanners that come with it, all that. You get that forever. This is one-time payment for everything. Then you also get the training videos, and then you also get into the Discord room. You pretty much get everything here for $24.96 forever. This is a lifetime. This is a really, if you're serious about trading and you can afford something like this, this is the way to go. This thing is really, really good. Now, they've added this week a couple of different things here. Instead of going for, if the lifetime is too much or you don't want to do it, commit that much, this is the SPY Super System software for annual, for a year. The SPY Super System software, you get the software, you get the scanners, you get my master classes. You get the installation as they put the software on your computer. You don't have to touch it, and you get a month in the live trading room, in my room for 1 month. $9.98 for that SPY software, SPY Super System software for a whole year, and a month in the room, so you can try out the room as well. This is really other than this being the best deal I've ever seen, this is really a good price, really, really good. And then again, you get the one-time payment. This is similar to what we just saw back here. Same thing with the SPY software and the options trading room. That's basically the same as this one right here. Okay, now if you have any questions, you can call Rory at 786-732-4656. If you want to talk about, maybe different lengths of time, et cetera, and he'll go over all that with you. I put this together a few weeks ago. I looked at what the annual subscription is for the service. Basically, $1,600 is the most you can pay for a year. If you did the alerts, if you did the quarterly, it's about $1,600. Your average trade size 2,000. If you assume you take all trades taken, historical results of almost 4 years now. Every single year, your return is 40 times. It's actually more than 40 times what you're paying for the service. 40. So you get a 40x ROI. So again, annual profits have exceeded 40 times the subscription cost. Not what you put into the trades, but your subscription cost. That's, to me, is pretty spectacular, and it's consistently paid for itself many times over. Again, you get high ROI, return on investment, Simple math, obviously, and improved results. And of course, past performance is not indicative of future results, obviously. Okay. And again, you can call Rory if you want to ask about this. Again, here's the systems. Here's the offers. Again, there's the 2-week trial. Rolls to $396 a quarter. The alert service forever. This is the room and the software forever. And here it is for a year, right here. If you want the software and month in my room for a year, $998. Really, really a good deal. This is really outstanding for annual membership, and you can renew next year if you want to. And if you don't want to, you don't have to. Okay. All right. See if we have any questions. Hey, Michael. If I have, I do have Australian customers. Yeah, I know it's midnight when the U.S. market's open. Trying to see how I would do this effectively. You know, I mean, it's obviously. I mean, I have people in Australia, New Zealand, Israel, Germany, France. Let's see, Lithuania. I even have somebody from Russia, Bolivia, in South America. All over the world. Yeah, Vietnam. We got a fellow that trains full time from Vietnam, and you know it's tricky. Now, if you're over there like that, all right, you're basically it's midnight when the U.S. market opens. But again, you're going to get the alerts, and you can go ahead and put the orders in on those, and they're usually good even for the next day. But interesting thing that's going to happen here. Not right now, but pretty soon. The U.S. markets are probably going to be trading 24/5 pretty soon, 24 days, 24 hours, 5 days a week. That's what they're talking about doing. It probably won't be till next year. But I do have a lot of folks over there that trade like this. And again, it's different for everybody. I know the fellow that trades in Vietnam, you know, he's 12 hours difference. So he basically trades at night. You know, he trades at night. But you know, I can't really give you too much advice on that. You get the alerts, you can do that, obviously, but it's going to be tough for you to be in the room unless you're up after midnight. That's what would have to happen. But I think the alerts would probably be able to take care of it, because some of those alerts you'll be able to get, and you can put them on when you get up in the morning, and they'll still be effective. That's all I can really tell you, Michael. All right. Again, thanks very much for the question. I appreciate it. So hope everybody had gathered some information here today that's helpful. I think that the Heiken-Ashi situation is very, very effective, and it's changed my trading. So it's very, very good. So anyway, that's the webinar for today. I appreciate that. I look forward to seeing some of you folks in the training room on Monday, and have a great weekend. We'll see you folks next week.